It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
If you want to buy a fairly run-of-the-mill home in a decent location in Willoughby, you're not getting much change out of $4 million. So it's a substantial chunk of change, and people in their 30s or even 40s sometimes need some help from mum and dad aside from the bank. So it's certainly happening a lot more than what it used to.
And that is Nick Dunn on our Wednesday morning, and welcome back into the Real Estate Breakfast right across Australia 7 days a week, talking what else but your property news and information. We talk about Brisbane, Adelaide, Canberra, Gold Coast, Melbourne and of course Sydney. We are literally everywhere, and you can stream us on multiple platforms including iHeartRadio and Spotify this morning. Into double digits for September. It is the 10th today. And are you a person who checks their rates bill? Sort of get the bill in, you have a good old gander at it. I have to tell you, I'm not. I will pay it when it comes in without questioning the bill itself. You might have caught up on this news last week. There was a situation where residents in two of Perth's most affluent suburbs, City Beach and Floreat, were overcharged by almost $1 million in council rates after a calculation error. More than 4,600 households and businesses will now be refunded amounts ranging from as little as $8 all the way up to $2,400. The mistake comes from, I like the way they say this, a misinterpretation of the Local Government Act, which inflated rates unnecessarily. Now, while the council has apologised and pledged refunds, it insists that services won't be cut under the corrected budget. And you can imagine what would happen if we said to the council, whoops, we have misinterpreted our rates. Let's go to Sydney right now and to a suburb called Willoughby. Nick Dunn from McGrath is joining us. And a very good morning to you, Nick. Welcome into the Real Estate Breakfast. Yes, had any of those misinterpretations that you've said to your council, sorry for my late fees?
Good morning, Craig. I'm a bit like you, I suppose. I just pay the bills when they come in, but I think I might jump on the phone to council to see if I'm eligible for any refunds as well.
Yes, why not? That's a big refund in Perth. Now, you were in Willoughby. Just tell us a little bit about Willoughby and the makeup of Willoughby.
Yeah, Willoughby's a pretty big suburb. There's a suburb of about 3,500 houses. I think that the population probably is sitting just under 20,000 people. Well, that's as an LGA. It's predominantly made up of houses, good local Australian families, but also over the past probably 5 to 7 years, it's really attracted some pretty strong foreign interest from the Asian markets, the Chinese in particular. We border on the suburb Chatswood, which has a strong sort of connection to the Asian culture. So great suburb, ease of access into the city, nice flat blocks, and all in all, a good family suburb.
You're just talking about Chatswood and that linkage into the Asian market. Just how strong have you seen that Asian market for 2025, those migrating in?
Yeah, it's big. I mean, I was listening to a podcast the other day, and I think they were saying, migration into Australia and New South Wales in particular has doubled over the past 5 years, and we've certainly seen it across the lower North Shore, but particularly in Willoughby. As I mentioned before, Chatswood's got a really strong connection to the Chinese culture, and a lot of people like to call Willoughby home. So it's been very strong, the interest both locally from local Australian families, but also there's a strong cohort of the Asian market that are both grown up here, but also a lot of sort of migrating across from mainland China to call Willoughby and Chatswood home.
Now, let's have a look at the median house price for 2025. Where is that at the moment on the dial?
Yeah, interestingly now it's sitting just north of 3.5 million, which has seen a fairly substantial jump from last year. It's gone up about 7 or 8%. So it was sitting around the sort of 3.250 mark, but now it's around the 3.52 for a block of land or a house.
And deposits, a lot of people are very fixated on the 20% deposit. You're transacting a little in the deposit range between 5 and 10%.
Yeah, I would say that our standard deposit these days is probably more so 5% than it is 10%. So probably just a cash flow thing. I mean, if you're buying a house at $5 million or $4.5 million, 5%, you're talking $225,000, whereas 10%, you're talking $500,000. So most vendors that we're selling on behalf of are fairly comfortable for it to be a 5% deposit. And what we've also seen sort of stretch out a little bit more over the last few years is the settlement term as well. Your standard settlement term in days gone by was probably 6 weeks, which to a degree it still is these days. But what's becoming more common now are the 3 to 4 month settlements that are taking place as well.
Now, we're talking about the market starting to heat up from this moment in time right through until Christmas, perhaps into the new year as well. Are you expecting those terms, when you say, pushing those terms out further than 6 weeks? A lot of the transacting, it all comes down to who's got the best terms and the shortest time to transact.
Correct. I mean, our advice to our owners is always to put your preferred settlement period on the front page of the contract, whether that be 6 weeks, 3 months, 4 months. The way we approach the situation is, we're open to offers of any kind from all the parties, and we'll just take that to the vendor. But we find if we put our preferred settlement term on the front page of the contract, that's where we draw the line in the sand. And if anyone wants something different, well, again, we're all ears, but you kind of got to come to us with a good reason to take that to the owner to get them moving away from their preferred to your preferred settlement term.
We are talking to Nick Dunn. He is in the suburb of Willoughby this morning, and we'll have more from this suburb in just a moment.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
And a good morning if you are in Perth. The supply of homes for sale in Perth has plunged dramatically. As of August, just under 3,000 properties, that is houses, units or land, were on the market. Now that is the lowest number ever recorded. It is down 18.3% from a year ago. And incredibly, I found this stat really interesting. 57 suburbs had just a single listing, while others had just 2. So the scarcity, it is fueling intense competition in dwelling values, which are up 6.5% on annual gain. Median prices too in Perth now sit around the $831,000 mark. Notably, unit prices are outperforming houses, up 10.4% over the year, with a median of $615,000.
Whether you're a seasoned investor or a first-time buyer, know your property with us on the Real Estate Podcast.
It is a Real Estate Wednesday. We are in Willoughby in Sydney, talking to Nick Dunn there. And the Channel 9 site, what has been happening there? Because that's in your local, isn't it?
It is indeed. It was, as you mentioned, the previous Channel 9 site where they used to film some great shows, the footy show included. That's now no longer. Mirvac bought that site and they were developing it for a couple of years. It completed about 18 months ago and they've now put about 430 beautiful units on there. And it's part of, a bit of a precinct there where they've got 10 sort of individual blocks with roughly 40 to 45 apartments in each block. Really nice finishing. They've got some great cafes there. So it's been a really good addition to the suburb.
And I want to talk also about, in your suburb, houses performing well in terms of sort of these knockdowns. They look at it and go, yep, this one we can knock down. Just how attractive is that in the suburb of Willoughby?
It's a huge thing. So there's what's called a conservation and a non-conservation zone. If you're in a non-conservation zone, it means that effectively you can buy that house and you can bulldoze it down and build a new house from scratch. If you're in a conservation area, it means that you have to keep the streetscape the same from the front. So you can't knock it down. You've got to keep it similar. Now, if you're in one of those non-conservation zones where you can effectively knock it down and rebuild, those blocks of land are selling anywhere between sort of 4 to 5.5 million, depending on the land size. The finished product being a brand new 4 or 5 bedroom home on, let's say, 550 square metres, which is your average block size in Willoughby. They're trading anywhere between 6.7, 6.8 and roughly 7.5 to 7.6 million. So there's certainly some good interest for those new homes, particularly we're finding from the Asian market.
Yeah, they do like that finished new product. And just take me back to around COVID 2020. What was a new property that you've just described? What was the price point then?
I'd have to go back and check the records to give you real confidence around it, but I suspect that you were probably buying a new build for somewhere in the sort of 5 to 5.5 space. So they've gone up, roughly $1.5 to $2 million over that 5-year period.
What about first home buyers? Mum and dad, the bank, they are obviously pretty influential if they want their children living in Willoughby. What's kind of happening around that space?
Yeah, we are seeing a bit of movement in that sense where mum and dad or grandma and grandpa might be putting in some money. We're also seeing, I'm 34 years old and I know a lot of, people my age, if you were lucky enough to get into the property market 5 or 6 years ago, whether it be an apartment or a townhouse, you've ridden that wave and you've built some pretty good equity in your place. The rate of growth that you're seeing in the strata title properties in these areas versus the rate of growth that you're getting in a freestanding house or even a semi, so a Torrens title property, those properties are outweighing and certainly outpacing the growth in the strata title properties. But at least if you were in there, you were building some equity in there. But just given how expensive property prices are in this area now, if you want to buy a fairly run-of-the-mill home in a decent location in Willoughby, you're not getting much change out of $4 million. So it's a substantial chunk of change. And, people in their 30s or even 40s sometimes need some help from mum and dad aside from the bank. So it's certainly happening a lot more than what it used to.
That is for sure. And as I mentioned, today is September the 10th. We're into double digits. I reckon we're kind of looking now towards the end of the year. Has your year been an accelerated one? Because I've been saying all year just how quickly the year is going. And what maybe are you looking for between now and Christmas?
It's gone quickly. We've had a bit of a change to our life. We've got a young little sort of 18-month at home, a young boy, and my wife's pregnant with our second. So things are moving pretty quickly. What are we looking for in the back end of the year? Probably just some consistent growth within our business. If I look at stock levels over the past couple of months in August and July in Willoughby, August there was 9 sales for houses and July there was 10 sales. And this is a market where you have roughly 3,500 homes. We expect that number to probably double when you get into this spring selling season, September, October and November. Typically speaking, you'll see anywhere from sort of 18 to 24 houses sell. So the numbers do increase substantially in this period. So we'd like to have, a consistent level of business happening through that period. And I find if you can do that well over this period, the next couple of months, it really sets you up and puts you in a good position to then start the year really strong. The new calendar year, that is in 2026. And around here, we tend to list and put a lot of our properties on the market in January, where not many other agencies are really operating or putting any properties on until February. We see that as a real point of difference, and it gives our vendors a bit of an edge and a bit of an advantage because we're just not competing with much. So yeah, hopefully from our end, a really good level of business between now and Christmas, a bit of a break with the family, and then sort of back up and running in that first week of January.
You said that your wife is pregnant. We've got to give her a shout out. What is her first name?
Her name's Lucy.
Good luck with everything, Lucy. And yes, Nick knows his numbers when it comes to real estate. We'll leave it there, Nick. Enjoy your Wednesday, and thanks for coming on to the Real Estate Breakfast this morning.
Thanks for having me. Absolute pleasure.
Listen to in-depth discussions with industry leaders on investing options, understanding different suburbs with insider perspectives and exclusive tips.
I'd found the perfect home in Surrey Hills. It was well within the client's budget, but the last call that needed to be made was to the client's clairvoyant to determine whether this was the right decision. Turns out that this was going to be the wrong decision, and the energy that this house had wasn't going to be fulfilling for my client's brief.
She's saying, no, you cannot buy the property. Got a bad vibe about this. What happened next, Bianca, in this story of yours?
We actually ended up buying a more expensive property that was inferior to this home. And that was purely based on the fact that the energy that this property had and the feng shui of the home was going to put a dampener on this prospective purchaser's life. Something that I really can't argue against with facts. I can't show comparable data. I can't show a graph or any indication of where a market might be moving, any past sales. There is absolutely no way around a personal decision that is determined by somebody's clairvoyant.
We connect you to the best real estate information across Australia. The Real Estate Podcast.